Okay, so in this lesson, we're going to focus fully on the candlestick pattern strategy. So as I said in the previous lesson, the Pinbar strategy is one of the most famous Japanese candlesticks, which is widely used by price action traders to determine reversal points in the market. You will learn how to identify potential pin bar signals and the condition needed for high probability setups. A pin bar is a chart candlestick. It is characterized by a very long tail that shows the rejection and indicates that the market will move in the opposite direction. So we basically went through the pin bar and showed you how it looks and everything, but right now this is the strategy that is solely focused on the bullish pin bar and the bearish pin bar, so that you can capture those high probability setups. A pin bar is a chart candlestick. It is characterized by a very long tail that shows rejection and indicates that the market will move in the opposite direction. The area between the open and the close is called the real body. Typically, all pin bars have a very small real body and long shadows. So a bullish pin bar is known for its lower wicks, and the bearish one is characterized by long upper wicks. So as you can see here, this is our bearish. It is the upper wick, and then our bullish candlestick has the lower wick, as we showed you earlier as well. So for the bullish pin, you can see that the long tail is at the bottom of the body, of the small body, and on the bullish candlestick you can see that the body is at the bottom. The long tail is actually on the upper side, and on the bullish the long tail is at the bottom, so we call it the lower long tail. So the color of the candlesticks is not that important. However, it is important to know that bullish candles with the white body, with white real body, are more powerful than candles with a real black body. So if this candle, if it is a white real body, it's more powerful than when it's actually a black body. Meaning that if it's this candle right here, depending on your colors for the bullish candle, if this candle is bullish, is a bullish real body, it's more powerful than when this body is actually bearish. Okay, when this body color is bearish of the bearish candlesticks on your chart. So depending on the colors, because not everybody has white and black on the chart. So just to clarify that, a bearish pin bar with a black real bodies are more important than the ones with a white real body. So again, if this bearish one has a red body, so if it's black or red, depending if it's showing the color of a bearish candlestick on your chart, then it's more powerful than when it's showing if the real body has the color of a bullish candlestick on your chart. So that's just what we are trying to say there. How to actually identify pin bar candlestick setups. So quality price action setups don't exist in the market, because you will see that sometimes you can find a high probability setup. You will take your trade with confidence, but at the end you will be frustrated because the signal fails for unknown reasons. That happens a couple times because the market doesn't move due to pin bar formations. You need to know that they are buyers, real people with emotions who are moving the markets. So what moves the markets is supply and demand. So if you identify a quality pin bar candle near a support key level in an uptrend market, this is a powerful buying signal to take. You shouldn't ignore it. But if the amount of money that buyers put in this trade is less than the amount of money that the sellers risk in the same trade, this means that the market will not go in your predicted direction. It will actually go the opposite, right? So if the signal fails, it doesn't mean that your analysis is wrong. All pin bars doesn't work. It just means that the market didn't validate your decision. So you have to just expect your loss and look for another opportunity. Remember, no strategy in the forex market is ever 100%. You will see some losses. As we said, even the highly experienced forex traders out there, they still have some losing trades. But the aim, as we explained earlier before, is for you to have more winning trades than your losses, right? So later on, we're actually gonna jump into a bit more in detail on the risk to reward ratios, so that you have a better money management strategy that will help you to be in profits, even if you see some losing trades here and there. Trading is a game of probabilities. There is no certainty, and that is why you should evaluate your pin bar setups from multiple angles. The fact that you are looking for quality setups means that you are trying to put the probabilities of success in your favor, which is the right mindset of successful traders. So to determine whether or not a pin bar is worth trading, the price action signal should respect the following. So number one, the pin bar formed in bigger time frames should be taken into consideration, because if you look at a smaller time frame, frames, you can easily spot a lot of pin bars. This setup should be ignored because smaller time frames generate a lot of signals due to a lot of noise that is happening there. Number 2, the pin bar formed in line with direction of the market is more powerful than the one which is formed against the trend. So remember, we trade with the trend, we don't trade against the trend. So the trend is a friend. If you can identify a clear trend, that means you know who is in control of the market. And then lastly, you should know that the anatomy of a pin bar is important as well. You have to make sure that the candlestick is a pin bar by looking at the distance between the real body and the tail. Pin bars with longer tails are more powerful. But in general, as we spoke earlier, as we described, the size of the tail should be 2 times the size of the real body of that candlestick for it to be a valid pin bar candlestick. So if it's actually longer than that, then it just means that it's more powerful because there's a huge rejection on that price point. So together with these 2 other reasons that we just stated right now, it will make it a very, very powerful signal. Okay, so now let's get to understand the psychology behind the pin bar formation. Pin bars are formed when prices are rejected. This rejection doesn't indicate a reversal signal because this price action setup can form everywhere on your chart. The most important areas to watch when trading pin bars are major key levels such as support and resistance, supply and demand zones, and moving averages. The formation of this candlestick's chart pattern in these levels gives a clear idea about what happens in the market. So if the rejection was near a support level, this is an obvious indication that the bulls are more powerful and they are willing to push the markets upwards. So this is a buy signal for you to enter this trade with more confidence. If the formation of this candlesticks occurs near a resistance level, this indicates that the bears have rejected the price and are preventing the bulls from breaking this level. Sellers are willing to push the market downwards. So this is again a simple selling signal for you. If you understand the psychology behind this price action patterns formation, you will be able to predict what is likely to happen in the future and make good trades based on high probability bar signals. So how do you actually trade these candlesticks together with a trend? So remember, we said you have to put together some of these techniques so that you have a proper confirmation, right? So trading pin bar candlesticks with a trend. If you're a beginner trader, you need to stick with the trend because pin bars that are okay in trending markets are good trading opportunities with high risk to reward ratio. When you master trading it with a trend, you can then move on to trading ranging markets or even counter trends. So the strategy is simple. The strategy is very simple. You start by identifying a simple uptrend or downtrend, and you wait for a pin bar to occur after a pullback to a support or resistance level on your chart. When we identify the trend, whether it's an uptrend or downtrend, and the levels, the support and resistance, and we find a pin bar near these levels in line with the direction of the trend, the second step is now to know how to enter the market based on the candlestick pattern. There are different entry options when it comes to trading pin bars. It all depends on the candle anatomy, the market condition, and your money management strategy. So the first tactic is called the aggressive entry option. So with this option, it basically consists of entering the market immediately after the pin bar closes without waiting for any further confirmations. So this will help you to catch the move from the beginning, because sometimes the price goes higher after the close of a pin bar, and if you're not in the market, well, guess what? This trade will live without you. And some of these, remember, they're very powerful. It will not actually look back, and it will just carry on in that direction, whether it's bullish or bearish, without turning around for a long time. So you might actually miss a lot of pips. This is where this aggressive option is actually very, very useful. The second tactic, we call it the trend. So if the market is trending down, we look for selling opportunities. If the market is trending up, we look for buying opportunities. And then the levels, remember, we have the support and resistance. We look for support levels that become resistance, or resistance levels that become support. So right when it exchange from being resistance to support, or from support to being resistance, and it forms that candlestick, that means it's our opportunity to take those trades, because it will be that will be a confirmed very strong trade to take. The last tactic that we have for you we call it the signal. So we look for a clear pin bar to form after the market or the price has retraced back to resistance or support level. When you have these three elements in the market, you just place your trade after the close of the pin bar. Your stop loss should be after the long tail, and your target or your take profit should be next to support or resistance level. So when you enter this trade, your stop loss should be after the long tail, so right at the end of that long tail or on the top, depending whether it's a bullish or bullish or bearish. But right at the end of that tail, you know, just a few pips below that, that is where your stop loss should be. And then your target profit, your target or your take profit should be near the next support or resistance level on your chart. These three elements are quite enough for you to find high probability entries in the market using this strategy of the candlesticks, the pin bar. So very, very important. So right now we're actually going to jump into another important thing that you need to understand, where we're going to speak a bit on risk to reward ratio, which is our money management strategy. So let's jump straight into that.